The stock market is nuts. So what's this about? And what's this about when we look at long Treasury bonds? Well, let's take a look at what happened to equities on Thursday right here when the initial jobless claims, continuing claims, and GDP came in lower than expected.
Rick, take it away.
Yes, let's start out with initial jobless claims, 207,000. That's much lower than we were expecting. We were looking for a number closer to 220,000.
Now watch these numbers over here on the right, the implied open, as he keeps talking about the numbers that came out for initial jobless claims and the GDP. You're going to watch these numbers get much more negative. Watch.
In the rearview mirror, we have 212,000. And by the way, 5 out of the last 7 readings have been 212,000. Never seen that before. Makes me wonder about these numbers, truly. Continuing claims, much lower than expected. 1,781,000. 1,781,000. That is the lowest level going all the way back to January 12th, the week of January 12th. That is a big drop. And last week's moved down from 1,812,000, also under, to 1,796,000. That is a big deal.
You notice the louder he talks, the more the markets drop. Kind of funny.
Now let's get to the money numbers. GDP, first look, first quarter. A disappointment, 1.6%. We're looking for a number almost
Watch
a full
yields
percentage point
go from
higher.
Down to up.
1.6 is the weakest growth
As these
on a
move
quarterly basis.
As these yields move up and turn green, that means the prices of these bonds are dropping. And you'll see that in the pricing data that I'm going to show you later. But this is just craziness. I'll put links to these 2 CNBC videos that I'm going to refer to in the pinned comments below. So when did these geniuses get back in after selling like this? Because clearly, here we are on Friday today, and the market's quite a bit higher than it was back here when these guys sold. Not a good move. And if you look at today, this last bit right here, apparently the markets really liked the PCE data, the inflation data this morning. And what about long treasuries? Same picture. They went up today. What are these people thinking?
It is time for the March PCE inflation data. Rick Santelli is standing by. Rick, take it away. Markets up ahead of the number.
Yes, we are waiting for, of course, the personal income spending, all the associated inflation metrics. This is a March.
Watch what happens to the Dow as the markets get the numbers.
Number looking for roughly up 0.5% on income, and it delivers up 0.5%, up 0.5% on income, up 0.8 on spending or consumption. And the 0.8 is definitely warmer than expected. It actually equals our last look, and our last look, that was the best since January of 23. So back-to-back 0.8% on spending. Of course, revisions still may be forthcoming.
So look, my point is this. You can see what happened on Thursday when the initial jobless claims and the GDP came out. The markets dropped, and yields on the long bonds and treasuries went up, so their prices dropped. And then what happens the next day on Friday? the PCE comes out and the futures go up and the bond yields drop and the bonds go higher. It's absolutely insane. In my video last week, I discussed what the markets might be afraid of and if their fears are valid. Link in the pinned comments below. But basically, it comes down to fear of all the current geopolitical risks in the world right now, and there's a lot of them, and fear of the Fed keeping rates higher for longer. When, quote, investors make these types of short-term moves in their portfolios based on the GDP, CPI, PCE, or whatever statistic that happens to be getting reported, they ultimately hurt themselves. This is why I tell you every week in my videos to dollar cost average into your investment portfolio as you have available cash, and don't try to time the markets. With all that being said, let's take a look at what the charts and metrics are telling us about the current state of the markets right now. So if we take a look back over this past week, you can see what I was talking about. The markets had a very nice rally on Monday, Tuesday, Wednesday, and then Thursday, when the initial jobless claims and GDP came out, boom, they all dropped and kind of came back toward the end of the day. And then today on Friday, they continued higher. So selling here, because your fear of the reports that came out, really didn't get you anywhere, did it? Unless you were smart enough to sell here and buy in here, but I don't think anybody did that. And so if we look at the markets, this is a very nice appetite for risk. We've got ARK Invest right on the top, NASDAQ second, small caps and S&P right here tied for third, let's call it, and the Dow finishing last. That's how you want it to look. Well, what if we look over the past month? Well, a different picture, as you could see, and I showed you this earlier, the market was dropping coming into this week, and then this week it proceeded to go higher. So hopefully we've seen the worst of it. And if we look at year to date, well, we still got somewhat of a rally here, but you can see that small caps and ARK are still lagging behind, and ARK is really down compared to the other indices. And if we look back over the past year, we still have very, very nice gains for the past year. Not what they used to be back here, but you can see that it looks like we've bottomed and we're going to start moving higher. And I'll talk to that as we go through some of the other metrics. And what about the bottom dynamics? Well, if we take a look at the bottom dynamics, I like what I see here. We had a bottom forming indicator here. You can see that we had a very high confidence level, this dashed black line, and a fairly high bottom forming indicator here, this orange line. And now what's happening is the market bottomed out. It's starting to move higher. And now the bottom confirmation signal is starting to move up, and the confidence level is shooting higher. So this gives me hope that next week we could see the markets move higher, and we could possibly see a bottom confirmation, which would be a good thing. And what if we look at risk versus opportunity? Well, this would scare the heck out of anybody, right? You've got risk acceleration up here above 80. That's really scary. I don't like it when it's above 60. And you can see it moved above 60 way back here before this peaked out. So that was kind of a tell. And you can see that the opportunity level, this blue line, started falling back here while this was still creeping higher. So you had a divergence here. This is moving lower. This is moving higher. And the risk levels are moving higher. That's a divergence. And by the way, you can see that the opportunity acceleration, this purple line, which I just added for the first time last week, you can see that really started to fall off back here before this finished peaking out. So there were a lot of signals here that we were kind of getting toppy here and that there was going to be a pullback. And of course, the red line, which is risk, is very much a lagging indicator, as is the opportunity level. But you can see it started moving higher way back here. So now where are we? Well, thankfully, this is pointing down a little bit. I'll take it. This is sort of flat topped. This is continuing to drop, but again, it's a lagging indicator. And I like that this moved up higher and is pointing higher here on Friday. So gives me some hope going into next week. And what about equity versus safety? Well, if we take a look at equity versus safety, let's go right into the overlays because it makes it a lot easier to see here. You can see that cash has stubbornly been up here in second place. And I said way back here, I don't like it when it's here. And I still don't like it, and I still don't like it, and I still don't like it, although I think we might be turning the corner. And then if you look at the NASDAQ 100, the Qs, you can see that they started to move up here very nicely. And then over the last couple of weeks, they just collapsed and are now in 9th place. Now, what about small caps, the other highest risk investments? Well, again, they moved up back here and have just collapsed and are now in 10th place. So what do we have? Well, we have all of the equity ETFs right down here at the bottom. In fact, these are the highest risk ones. The Dow is actually the safer one, and it's being beat out by the SPY. But these two are safer than these two, and you can see that this is showing little to no appetite for risk. Now, what about treasuries? Well, if we take a look at treasuries, all the treasuries are up here, and just like equities, these are in an unhealthy relationship. You have the riskiest long bonds here, at the bottom of the Treasury heap. And then as you go shorter in duration, right up to cash, they're right in order. This is about as unhealthy of a Treasury bond appetite that you can get. And then gold, of course, is staying up here in first place. Well, how does all of this show up in the buying and selling pressure? And why do I say I think we might be at the beginning of a turnaround here? Well, let's take a look at the Dow Jones Industrial Average. You can see that it peaked out back here. It was falling. Then it bottomed out here, and since then has been starting to move higher. Now, what do I see here that I like? Well, remember I talked about divergence with the risk acceleration and the opportunity levels back in the risk versus opportunity graph. Well, we also have a divergence here. Look at the price, it's falling. And look at the trend, this little tiny dashed line, the 1 month trend line on the buying pressure, which is this solid gray line. You can see that it's trending higher, and it started trending higher back here, right? While this was still falling. And this peaked out and is falling. The selling pressure is falling. Now that peaked out right at the bottom, so that's kind of making sense. But you can see that it's been falling and this is going up. So that gives me some hope. What about the S&P 500? Well, I like the fact that this peaked out here, it's falling, and the buying pressure is increasing as the price increases. Same thing for the NASDAQ 100, and same thing for small caps. And you can see in almost every case, the buying pressure is either above the selling pressure, so the solid gray line is above the orange line, or it's pointing in that direction. So that gives me some hope. What about ARK Invest? Same picture exactly. In fact, you can see that the selling pressure peaked out here, just collapsed, and the buying pressure is moving higher as the price moves higher. So this is showing a shift in momentum, and I really hope this continues going forward. What about sector rankings? Well, if we take a look at sector rankings, I show you these, but these are really slow. They don't move very fast at all. And if we look at a week ago, you can see that we were in somewhat of an unhealthy situation, but not terrible, right? Gold up here, but then you've got cash and treasuries way down here. And if you fast forward to this week, cash and treasuries are still way down here. So this doesn't really look too bad. What I don't like here is that the NASDAQ 100 last week was down here. ARK Invest was way down here near the bottom. Small caps were here. Now what's happening? So small caps have moved up. That's good. What happened to the NASDAQ? NASDAQ moved down, and ARK Invest moved down even more. So, you see these shifts in the higher risk assets. And even though this overall, you kind of look at it and go, yeah, that doesn't look bad. You can see movements here that really aren't that good. And we don't like the fact that consumer discretionary pulled back as well. So let's look at sector rank acceleration, because these move a little more quickly. And you can see, even looking at last week, when we looked at the sector ranks, cash and treasuries were way down here at the bottom. But when you look at acceleration, they're up here, and you don't like this. They're up here. This is not a good place. And gold is right up here at number 1. Now, what's interesting is consumer discretionary is up here ahead of consumer staples. So that's a little bit odd. But then you move to this week, and that changed. Consumer staples shot up here. Gold's still up near the top. Utilities, safe haven asset, right here in number 1. And consumer discretionary moved down a bit. So this is showing you a little bit of degradation here, actually, even though the markets appeared to have turned around. And this, even though this moves faster, this will lag the actual market movement. And what about treasuries? Well, yeah, nice beginning to the week. And then going into Wednesday from Tuesday, you can see things started to collapse. And then they collapsed again on Thursday when the initial jobless claims and GDP came out. And then on Friday, when the PCE data came out, they started to move higher. So very wonky market here. And, the people who sold these back here missed out on the upward move that we're hopefully going to see going into next week. But time will tell. And if we look back over the past month, well, this is just a terrible appetite for long duration treasuries. So they're down quite a bit. And what about year to date? Similar picture, just very unhealthy looking risk appetite for long treasuries. And treasuries in general, they're all lower. And then if we look back over the past year, similar picture. All of them are down. So look, this, these long bonds, this purple line, they're not far off of where they were back here. And they're down 21, 22%. So they have to go up more than 25% just to get back to zero. And these are fairly safe haven assets. So that kind of return over however long it takes, whether it's 6 months or a few months or a year, that's a really good return for a safer haven asset. And what about the buying and selling pressure? Well, again, we have somewhat of a divergence here. Look at this. Short-term treasuries, I think these are 1 to 3 year treasuries. You can see that the price was declining here, but look at what the buying pressure has been doing. It's been increasing as the price was dropping. And then eventually, as the buying pressure kept increasing and the selling pressure, this orange line, kept dropping, you can see the price turned around, started to head higher. And what about intermediate treasuries? Well, you still have a bit of a divergence here. You can see the price was dropping and the buying pressure was increasing. Now, it hasn't really quite turned around here. It's kind of flattened out to slightly up, but you can see that the buying pressure, even though it's kind of fallen off here, is still above the selling pressure, the solid orange line. And then if we look at what I call intermediate to long duration, 7 to 10 year treasuries, we don't have the divergence so much here. In fact, we don't have it at all. But you can see that the price dropped, and just like intermediates, it's kind of going sideways to down. And then if we look at long bonds, very much a downward move. And again, at the end here, sideways to down. So not a great appetite for the longer duration treasuries yet. And what about that yield curve? Well, oh boy. Yeah, so you can see right here that the inversion, back a few weeks ago was over 40 basis points. Then it moved down to 38 and then 32. Now we're at 29, just shy of 30 basis points inverted. So this is improving. It's moving toward being uninverted, but you can see why. Interest rates at the short end, here's 1 year and here's 6 months. You can see that they're higher today than they were a month ago, which is this red line. Today is this top blue line. And then a year ago is this light blue line. But what's happening at the long end? They've gone up even more at the long end, which is causing this to become less inverted. So that's not good for long bonds. And you see that in the price of the long bonds. They've been dropping. And what about the Fed rate monitoring tool? Well, we've got a meeting coming up in, just 4 days. Wow, that went quick. And you can see that the markets are firmly in the camp of they are not going to lower rates. The Fed's not going to lower rates. They're going to keep them right where they are. So 97, almost 98% likelihood that will happen. And if we look at, there we go, showing me shoes again. And if we look at June, yeah, it drops a little bit, but the markets really don't think anything's going to happen in June. And where do we have to go to before the markets think there might be a rate cut? Well, you have to get out to September, and then the likelihood of a rate cut is better than 50%. So only a 42, 43% likelihood that the rates will be where they are today. So we'll see. These can change really drastically as the Fed's measures of inflation come out and they make assessments and make decisions.
I feel like I'm afraid.
And what about gold? Well, gold, yeah, with all the geopolitical tensions and contagion in the world, it's just been shooting up higher. But as it was going higher, so here's another divergence, right? Look at this. The price was moving higher here, but what was the buying pressure doing? In fact, you can see it in this 1 month trend line. It's been decreasing back here as the price was going higher. So what happened? It finally topped out and has started pulling back. And you can see that the selling pressure during the same time as the price was going higher, the selling pressure was moving higher. So you can't have the price keep moving higher with the selling pressure increasing and the buying pressure decreasing. Eventually it's going to break, which is what it's done here. And you can see that the selling pressure is now above the buying pressure. So right now it doesn't look good for gold going forward.
You can have
And what about Bitcoin? Well, Bitcoin's been just kind of treading water here. You know, it had a huge rally. If I go back a couple of months, it really shot up here. And you can see that it's been sideways to down. Just seems to be consolidating. Now, the longer it does this, the more likely it's going to make a big move, either up or down, once it finally moves. But yeah, I mean, you have a bit of a divergence here, though, now that I'm looking at this. So you can see that the overall price direction here is downward. But look at this little dashed line, which is the 1 month trend of the buying pressure. In fact, just look at the peaks. We had a lower peak here and a higher peak here, but a higher price here and a lower price here. So again, we've got a divergence. So maybe this will turn around. This can't continue without the price turning around and moving higher.
you can have
If there's one thing to take away from my market reviews over the past couple of weeks, it's that the equity and bond markets were skittish and on edge, as you can see here. You can see they were dropping a couple of weeks ago. But now it's starting to look like they could be turning around. Look at how we've moved higher this week. This is why I caution you to be an investor rather than a trader who tries to time the markets.
if it's only you have.
Investments and investing aren't that complicated if you know how to allocate your portfolio without destroying your returns and getting little to no protection from downside risks. As an investor, you need to take the long view and allocate according to your risk tolerance rather than fretting about what's currently happening in the world or what everybody else is doing that you read about in the media with their portfolios. If you want to be a better investor, I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below, titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments.
If it's only you have.
Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
Stay up all night, gotta work now. Make up my mind and it turns around. Say that I'm fine till I burn out. Thinking this money sounded so nice. Ambush here in the strobe lights. Pay anything for the high price. This life feels like the sunny water. Wet my lips, but the sun's stronger. Pour it out, if I'm being honest. It's just not everything you promised. Running out, drying out, what did you say? What did you say when I told you? Maybe this wrist wasn't gold proof. Packing my bags like it's all true. Hard to make friends when I'm focused on all these bars that I'm holding. I like the cold, but it's lonely, yeah. This life feels like the sunny water.